I get the feeling there are a few people, maybe more than a few, that are uh, planning on shorting the stock market when the S&P tags this 200-day moving average. I'm going to say right now that I am not going to give my blessing to short the stock market. With central banks pumping this many trillions of dollars, currency units into financial markets, yes, it is getting late in the daily cycle. Yes, we should get a top here soon and then move down into a daily cycle low. But there is a very real possibility that the liquidity just overwhelms the cycles and sentiment, and this 200-day moving average may not stop this rally, and 30 plus days into the daily cycle may not stop this rally. So uh, I'm perfectly happy with people taking profits on a tag of this 200-day moving average, but I do not think it is a good idea to short the market. Um, the only time that the odds are at all good for shorting is when we're due for an intermediate degree decline, and we are not there yet, not by a long shot. As I've been saying for a while, I think the stock market is discounting reopening the economy, and that is just now starting to happen. So I I think we've got another month or two as everything opens back up, and then we see how much damage has been done, how much damage is irreparable. I just got notice today that my favorite restaurant has gone out of business. That's a national chain. They had 4,400 employees. All of those employees now have no job to go back to, and um, almost certainly the economy is going to be um, either in a recession or very sluggish, and maybe even in a depression for a while. So the prospects of any of these employees getting a job are very slim. And this is just the start. I think there are going to be a lot more businesses going under, and a lot more employees getting permanently laid off with no prospects of finding a job anytime soon. So um, right now, the liquidity and the prospect of reopening the economy is driving the market up, but at some point, reality is going to set in, and we're going to start seeing just how much damage has been done and how much of it is irreparable, or that is going to take months and months or years to repair. And at that point, then we're going to start down into the next intermediate cycle low. So um, it just this is not an all clear to short if we tag the 200-day moving average. The only time I would be at all comfortable with that, and I am never comfortable shorting, would be once we get into the timing band for an intermediate degree decline, and that's probably, I suspect this is going to right translate. So I would say we're going to need to get um, somewhere between 13 and 18 weeks before this intermediate cycle tops, and then we start to move down into the next intermediate cycle low. And like I've said before, I think we're probably going to be stuck in a range between maybe 3,200 on the S&P on the upside to 24 to 2,600 on the downside. We may go above that on the S&P. Um, I think the Nasdaq is going to test the all-time highs, and let me switch over to that real quick. Okay, so you can see here the Nasdaq is already pushing into this gap right here. So I suspect there's a good chance this gap is going to fill before this daily cycle tops. Um, I see people trying to pick tops here. I think you're premature. And like I said, I really don't think there's any call to try and pick a top until probably sometime in June. The first daily cycle could be very mild. There just may not be enough potential there to make any money on the short side. All right, and then let's finish up with gold. This is, this it's going to be a judgment call. My feeling is that the banks are not going to win this battle. They want to break this triangle pattern, break it down, and give us a deeper daily cycle low down here, and they want to cover some of those shorts into a breakdown. Um, when the bulls defended this attack on Wednesday, defended on Thursday, that that was my indication that, or that made me think that the bulls are going to win this battle and the banks are not going to be able to break this down. Um, gold did marginally poke above the triangle trend line today. There was potential that we could have gotten the breakout and then started a strong leg up, but they sold it off during the day. Although after hours, the dollar sold off hard. So I think they're going to unless the ECB can reverse the currencies on Monday, we're probably going to start off with the dollar. You can see here the dollar considerably lower Monday morning, and I think it's going to be hard for the banks to hold this sell-off on Friday. I think it's going to be hard for them to um, hold this down or produce any follow-through to the downside here. Now, I will say um, this seems a little early to me, this sideways consolidation. It started in the middle week of April, so we're not even really a month into this sideways consolidation yet. And I would kind of anticipate that this is going to last a month or longer. So we may, we could break out of this trend line, but just stay stuck in a box. And let me kind of draw that in for you. All right, so this is kind of what I'm talking about. The triangle pattern may just kind of break down, and then we just stay stuck in a box here where we're just churning back and forth, and we have to chew up another week or two before we can get a breakout to the upside. But I'm making a judgment call here. I think we're going to break to the upside, and I don't think the banks are going to be able to break gold down out of this box below this pivot right here. So for now anyway, I'm comfortable just continuing to hold long positions in the metals. We may, be stuck with some whipsawing here for another week or two. And let me convert this over to the weekly chart. You can kind of see what I'm talking about. We're just stuck in this range. We've had a very powerful move off the bottom at about 1450. We made it almost 1800, so almost 350 points, and now we're just churning sideways. And I went over this in one of my previous reports. This is kind of how the bull market has. This is kind of a familiar pattern. You get a first leg up that produces some very nice gains, and then you just have to endure multiple weeks of just going sideways and not really accomplishing anything. And then, when everybody finally gives up and becomes frustrated, that's when the second leg up begins. And then you tack on another move that's of similar magnitude as the first leg. So that's what I think is going to happen. That's why I made the call Friday morning on the employment report. I think you can just go ahead and get back in and just hang on. And if something changes, if they do manage to take out this pivot, drive gold, significantly back below 1700, then I'll have to just make a real-time call, another judgment call as to whether or not I think we should stop out and then, kind of wait for maybe a lower daily cycle low or not. But for right now, I think we're in a sideways consolidation, and I think eventually it's going to break to the upside. And then finally, moving on to the miners, you can see we had a reversal candle last week. We've got some follow through this week. We're still very stretched above the 10-week moving average. If I'm right, and gold still has another week or two of sideways churning to do, then we're probably going to just churn here in the miners as well. I would not be surprised if next week is a flat to slightly down week. Really doesn't produce any kind of follow through to the upside. Um, but ultimately, I think the miners are going to at least reach that 39 level. And um, as I said before, a lot of this will depend on whether or not, if gold does break out of the consolidation next week and we start to get a powerful move up, then GDX, it will not uh, churn sideways or give us a down week next week. It'll just keep blasting off higher. And this breakout from this multi-year consolidation, and let me widen this chart a bit. All right. This breakout from this 7-year basing pattern will continue to push higher aggressively, but it's going to take gold's going to have to break out next week. It's going to have to exit the churning pattern that it's been in, and I'm not sure that it's ready yet. Like I said, we haven't even really actually um, gone 4 weeks in this sideways churn yet. So a lot's just going to depend on whether or not gold breaks out of its sideways consolidation and starts the next leg up. If it does, then the miners are going to just continue to surge higher, and they're probably going to get to this resistance zone very quickly. And if that happens, then as I said last week, if we can get here quickly in the intermediate cycle, then we have a chance to break through this resistance and then come all the way up to this level here at $55 would be the next resistance level. But this has to happen quick. We can't we can't waste 12 weeks of the intermediate cycle just getting to here. We need to get to here by week. I think next week's going to be week. Let me count it. I think it's week 8. Yeah, that's correct. So next week is going to be week 8. So I'm going to give it 3 more weeks. If GDX can get to here by week 10, then we've got another 5 to 8 weeks to get to here. If it takes us, another 5 or 6 weeks to get to here, then we're not getting here. We're not going to get through this resistance. If it takes us, somewhere between 13 and 15, 16 weeks to get to this resistance zone here, then it'll just simply be too late in the intermediate cycle and we're not going to make it. But if gold were to break out of the consolidation next week and that drives the miners in a powerful move up, and we can get here in, say, the next 2 or 3 weeks, then I think at that point I think we're going to 55 during this intermediate cycle. So the next 2 or 3 weeks, I think, are going to tell us the tale of what kind of move we're going to get in the miners during this intermediate cycle. And then to finish, looking at silver, we finally got our close above the 10-week moving average. So as I've said, in the past, and any of you that have been here for a while, you know this. This is how the silver market moves. The first daily cycle tends to be pretty sluggish. That usually is led by gold and the mining stocks. And then silver really starts to blast off, usually like the last 4 or 5 weeks of the intermediate rally. So with silver finally closing above the 10-week moving average, I think it's ready. We're just waiting for gold to blast out of that sideways consolidation, and when it does, then I think silver is going to be on the move. I don't see any reason at all why silver couldn't at least retest this level here, right at close to $20, and I think it's not out of the question that it could break significantly above that level during the final 5 to 8 weeks of this intermediate cycle. All right, everybody have a good Mother's Day and a good weekend, and we'll come back Monday morning and see what the market gives us.